Tips to increase the chance of getting a home loan approval. So in today's video, I will be giving you guys 13 tips to increase your chances of getting a home loan approved in New South Wales. The first tip is to lower your standards. This may come as a surprise, but it is true. And for me to give out this tip at the very start of this video means that this tip is the most important tip in my opinion. Getting a home loan is quite difficult. If I think back to my high school years, getting a modest home loan is like achieving Band 3 or Band 4 in the higher school certificate in Sydney. You need more than Band 2, which is the pass mark for your high school. I am a mortgage broker and a lot of customers I see would like to buy a $1 million house with 5 bedrooms in the house. That will be like getting Band 6 in the HSC. It's not a modest home loan, and instead it is a giant home loan. It is difficult. If we use the analogy of the HSC, you need to be a nerd to successfully purchase a $1 million house. People make fun of nerds at school. You do not want to be a nerd. Just don't, okay? So rather than aiming for a $1 million house, you are more likely to achieve your goal if your goal is to buy an apartment and spend only up to $650,000, maybe even less than that. At $650,000 as the first-home buyer in Sydney, you do not need to pay stamp duty, so you need less cash upfront. Over a long period of 10 to 20 years, property tends to go up in value even if it is an apartment. So even though it may go up in value a bit slower or a lot slower compared to a house, you still have a home and your net worth will increase over time. Tip number 2. Tip number 2 is to start saving when you are young. A home loan in Australia is a 30-year commitment. A lot of banks consider the realistic retirement age to be when you are 70 years of age. So ideally you want to have purchased your home by the time you are 40 years old. Now, an average Australian person will find it relatively easy to save $100 a week. A couple can save $200 a week together. A lot of banks want you to have 8% deposit or higher. If the home is $650,000, your deposit will be $52,000, so it takes you and your partner 5 years to save up this much money. So the absolute latest age you want to start is when the oldest one between the two of you is 35 years old. I'm not saying it is not possible to start later, but why make your life more difficult if you don't have to? Just get started earlier and you will be an attractive customer that all Australian banks want to welcome. The idea of this video is not to find a bank who is happy to approve you, but to make yourself really attractive to be headhunted by all the banks in Australia. I just want to say this out loud so you do not misunderstand. Tip number 3 is to pay off all your loans. Because a home loan is a 30-year loan and a personal loan is usually a 5-year loan, the monthly repayment on a personal loan is much bigger compared to a home loan if the amount of debt is the same. A $10,000 personal loan can easily reduce your maximum home loan amount by $50,000. That's a factor of 5. So not only do you want to save and have 8% deposit, you also want to make sure that you have no existing debts. Tip number 4 is to have only one credit card with a maximum credit limit of $6,000 and no carrying balance. This is not financial advice, but a credit card has a similar impact on your maximum home loan amount as a personal loan. A $10,000 credit card limit, even if the balance is zero, will easily reduce your borrowing capacity by $50,000, a factor of 5 or more. There are many credit cards with nice perks like rewards points, complimentary travel insurance, extended warranty on random stuff you buy using that card, and so on. So having one credit card is useful for your life. You can choose a platinum card which has a minimum credit limit of $6,000, or you can choose an American Express card. If you call up Amex, I'm very confident that they can reduce your credit limit to $2,000, even though the website probably says $3,000. But remember, a lot of shops do not accept Amex, so maybe just stick with Visa or MasterCard. Having a credit card will also establish your credit history, and it can make it a little bit easier when you want to get a home loan with a small deposit. If you are a couple, perhaps one of you can close down your credit card a few months before applying for the home loan. So the two of you together do not have too much available credit card limit. You can then add your partner as a supplementary card holder on your credit card. You still want to have a credit card beforehand because you want to establish your credit file, but when it's closer to the time for you to apply for the home loan, one of you can close down the credit card. Tip number 5. Tip number 5 is do not jump ship too often. Okay, so sometimes you can get a higher paying job by jumping to another company, or by choosing a casual job or a fixed term contract job. This is good, but a lot of banks want you to be in your current job for 6 months when you apply for a loan, and you will still need to be in that job when the loan commences. A lot of my customers take 3 months, 6 months, 9 months from start to finish to buy a property. Even after they find the property and sign the purchase contract, the settlement day in New South Wales is still 6 weeks away. So really, you need to stay put in your job for a lot more than 6 months. The thing with casual jobs and fixed-term contracts is that you do not always know if you will still be in that job 6 months later, 9 months later, or 12 months later. Yes, you can try to plan ahead. If you go back to the start of this video, I suggested that you probably take 5 years to save up a deposit of 8%. So if you want to, you can jump around in the first 4 years, but then start to settle down towards the 5th year. Tip number 6 is to choose a job with a high base salary. This is probably not a tip, but it is background information you may want to consider. A lot of banks do not count your variable income in full. For example, if you do overtime or earn commissions, a lot of banks look at the average you have earned for either the last 6 months, the last 12 months, or the last financial year, and then they multiply this average by 80%. So for you to get a bigger home loan by choosing a job that gives you a lot of overtime or commissions, your total income needs to be a bit bigger than just a bit bigger, if you know what I mean. So has to be a bit bigger than just a bit bigger. If you receive an annual bonus, a lot of banks will look at the most recent bonus that you received and the bonus you received the year before, and then take an average. If the most recent year is lower, the banks will use the lower figure. If the most recent bonus is higher, the banks will take an average of the 2 years. And if you have just started a new job, usually the bonus cannot be counted, even though you did receive one last year in your previous company, and you know in your mind that you will definitely get a bonus again this year. If your job is casual, some banks will annualize your income based on 46 or 48 working weeks in a year. So even though you get paid more in real life because you never get sick and you never take a holiday, the bank will think that you get paid less. So you have two choices: either get more money in real life or get more money in the eyes of the bank. I will let you make up your mind. Tip number 7 is to pay your bills ahead of time. It goes without saying that you should pay your bills on time, but I actually pay my bills ahead of time. As soon as I receive my credit card statement, I pay it off, even though I have another 3 weeks to pay it. If I delay the payment, maybe I get sick when the credit card bill is due and I forget to pay. By paying the bill early, I have an extra 3 weeks to realize that I forget to pay, and it is almost guaranteed that I will come to this realization before it is actually due. Your credit card and loan repayment histories now go into your credit file, so it is important not to be late. Tip number 8. Do not defer your loans even though it is like free money. Because of the coronavirus pandemic, a lot of banks are offering repayment holidays, and they say that deferring your loans does not impact your credit score. It may not impact your credit score, but there will be some hints on your credit file or on your loan statements that you need to provide to the bank. Sometimes when you apply for a loan, there will be some hints that you deferred some of your existing loans. If you deferred your loan in the last 6 months, a lot of banks will become super cautious about you and require extra information or documents to make sure you have sorted out your problems and everything is good now. Tip number 9 is to choose a property which is easy to buy and also not risky to buy. Let me explain. The easiest property to buy is an off-the-plan apartment, because buying an off-the-plan apartment is like going to a car dealership and buying a brand new car. You only need to pay a small deposit, sometimes can be as little as $10,000 or $20,000. You do not need a home loan approval. You don't actually need to have a job. The apartment is completed 1 year, 2 years, 3 years later, and you have 1, 2, or 3 years to save yourself more money and to get yourself a job. I personally don't think that it is a good idea for your first home to be an off-the-plan apartment, just in case something goes wrong and you cannot find a job. Or on a more serious note, in case the look and feel of the building turns out to be different from the pictures. Because on the property purchase contract, there are no pictures. There are only some dimensions, and even those can change a little bit. What I think is both easy and not risky to buy is an established apartment. An apartment which is already built and you can see with your eyes today. You do not want to aim for a house because a house is usually popular and therefore it goes under auction. And with an auction, you do not have a cooling off period, at least in New South Wales where I live. Even if you have a home loan pre-approval, there are still a few more stages that need to go in your favor after you have won the auction, especially if your deposit is only 8%. You do not want unnecessary headache as a first-home buyer with no experience. Just take the baby steps and you can be more adventurous later. There is another type of property which is gaining popularity due to the number of incentives from the government since last year, and that is a house and land package or a block of land with a separate contract to build a home. This kind of property is somewhat between an off-the-plan property and a completed house. You sign the purchase contract when the block of land is still empty, sometimes when it is not even subdivided yet, so you do not have your own title yet. The home loan can be approved as soon as the land is subdivided, and if by that time you already have your fixed price building contract, you can get approved for the construction loan as well. The problem with this kind of setup for first home buyers is that there is so much paperwork, so many choices, and so many stages of the process. They often get confused. First home buyers are often confused by the number of steps. You also need to start paying the mortgage when the land settlement takes place, and at this stage, you do not have the house yet. It's still under construction. So for the next year or so, you will have two outgoings. One is your mortgage for your future home, and the other is your rent for the place you actually live in. If you decide to buy a block of land anyway, despite what I have said, you want to make sure that your job is stable at least for the next 12 months, because the registration of the land with the land titles office will take a few months, and the fixed price building contract will also take a few months. Sometimes 3 months, sometimes 6 months, sometimes maybe 12 months. So if your job has variable income like overtime, commissions, and annual bonus, you want to make sure that you maintain those variable income components for the next 12 months. What this may mean is that you should not go on holiday until you have your fixed price building contract and you have your unconditional approval from the bank for the construction loan. Tip number 10 is do not be too greedy. This goes back to tip number 1, which is to lower your standards. As a first-home buyer, there are so many government incentives and government grants. The whole set of schemes is complicated. Even I find them complicated, and I am a mortgage broker. It is so easy to be tempted to extract the maximum amount of benefits from the government, but this makes your property purchase a more complex process. You almost need to get band 6 in the HSC or high distinction at university if you want to extract the most amount of money from the government. But if you want to know, I will mention some of the first home buyer incentives available in New South Wales. The first one is the FHLDS, that is the First Home Loan Deposit Scheme. If you and your partner are both Australian citizens and both of you have done your latest tax returns, that is for the 2020 financial year, as of the time I filmed this video, you may be eligible for a 5% deposit home loan without having to pay for lender's mortgage insurance (LMI). This can be a huge savings. On a $650,000 property, the savings can be around $20,000. As of today in Sydney metro areas, the property price can be up to $950,000 to qualify under this FHLDS scheme, but the property has to be brand new. Brand new property means the property has never been sold before. It can be a house and land package, or a block of land with a separate contract to build a home on it, or it can be a house or an apartment which is already completed but has never been sold to anyone since it was completed. On a $950,000 property, the savings in LMI can be as high as $30,000, and you only need 5% deposit instead of 8% deposit. The second incentive for first-home buyers is the First Home Owner Grant (FHOG). This is currently $10,000 in New South Wales. You do not need to be an Australian citizen for this one. Permanent residents are okay as well. If you have a partner, your partner can be on the provisional partner visa, and it should still be okay. The property price can be up to $750,000 if you are building a house, you're building it yourself, but only $600,000 if the house is already built or if it is an apartment. The third incentive is the First Home Buyer Assistance Scheme, which is the stamp duty concessions. This one also does not require citizenship. You could be a permanent resident. If you're buying a second-hand home, you pay zero stamp duty if the price is not more than $650,000, and you get a bit of a discount if the price is more than $650,000 but still less than $800,000. If you buy a house or an apartment which is already completed, but it is brand new and has never been sold to anybody, stamp duty is waived if the price is up to $800,000, and you get a discount if the price is more than that but still below $1 million. Now, if you are building a house, that is to say you're paying a builder to build the house, not literally building it yourself, The government looks at the value of your vacant block of land, and stamp duty is waived if the land value is no more than $400,000. Remember, if the total value of the home is less than $800,000, if the land component is above $400,000, you will pay stamp duty. Still, you get a discount if the land value is less than $500,000. Almost there. The fourth incentive, and this is the final one, is the home builder grant. This used to be $25,000 and now it has been reduced to $15,000. The property price can be up to $950,000. This grant is usually for when you build your home, but you may also be able to get it if you purchase an off-the-plan home or a brand new home which is already completed but never sold to anyone. If you build your own home, construction must commence within 6 months, so the council must have approved your building plans within this time frame, and your builder must be ready to move quickly. If you buy an off-the-plan home or a brand new completed home, construction must not have commenced before the 4th of June 2020, and the property must be completed and settled by 30th April 2023. So what's the key takeaway after I go through the 4 different grants and incentives available to first home buyers in New South Wales? Well, long story short, if you want to minimize the amount of costs or even turn the costs into an income, you probably want to buy a property which is brand new, already completed but brand new, and the price is not more than $600,000. Or if you do not mind having a few headaches and taking a bit of risks, you can build your own home. Buy a house and land package or a block of land, and then you choose your own builder soon after, and you will then have up to $750,000 to splurge in New South Wales. If you go beyond these limits, you can still save money in the sense that you do not have to pay lender's mortgage insurance and you pay 0 or reduced stamp duty, but you will lose the $10,000 first home owner grant and potentially the $15,000 home builder grant. I think as a first home buyer, it's nice to keep things simple. Each individual is different, but from my experience, a lot of my customers do not end up buying anything because they have too many goals. They want to get a 5-bedroom house on a large block of land because land goes up in value and buildings depreciate over time. They want to get the FHLDS. They want to get the first home owners grant, get the first home buyer assistance scheme, get the home builder grant. They want to get everything. They talk to 100 real estate agents and everybody is saying different things because they have different things to sell. They just tell you whatever suits the things that they are selling. Anyway, the whole journey becomes really messy and confusing. As a first home buyer, I would rather just buy something simple. Maybe buy a $650,000 property because that's when the stamp duty starts to kick in if the property is secondhand. If you do have a really excellent income and really excellent savings, sure, you can buy a nicer home, but I can tell you that it is quite difficult to buy a property costing more than $650,000. An average Sydney family earning average wages cannot afford this kind of home. Now I will give you a few more tips. These will be tips numbers 11, 12, 13, so they are not that important, but please feel free to keep listening. And hey, if you are still here and you gain something useful from this video, please gently tap the like button so more people like you will see this video as well. Tip number 11 is to rent fast. Rentvest is where you continue to rent, or if you want, you can live with your parents, but then you purchase an investment property and rent it out to other people. Why do people rent first? Well, there are two key reasons. Number one is property experts say that a property which is a great investment is not the same as a property which is great to live in. When you invest, you want to look at different things. You want to look at certain locations. You want to buy in locations that has good capital growth potential. You want to try to time your purchase with an upcoming infrastructure project. You want high rental yield in addition to high capital growth. You want this and that. You want a few different things. You do not want to over renovate a rental property. You want something which looks visually decent but not over capitalized, and you may not actually want the best of the best because you don't want to spend too much to get a similar rental income. So there are definitely some truths in these concepts. But I tell you that this is only half of the story. The other part of the story, the second reason, is related to tip number one, which is to lower your standards. If you rent first, your property budget is going to be highly flexible. You can buy a 2-bedroom apartment in Western Sydney for under $650,000. You can even buy a house in a regional town for under $650,000. In fact, you can buy a house under 200 grand, that's $200,000 if you go far enough. This is true. You get a house with a lot of land. Just go to realestate.com.au, choose a house as the property type, and then filter the price to be under $200,000, and you will see a few results. So basically, anybody can buy an investment property if the budget is flexible. So if you feel like you want to live in a house with 5 bedrooms within 10 kilometers of the Sydney CBD, but you cannot get a home loan for a $1 million or a $2 million house, you can buy an investment property instead. Maybe after 10 years, you have a lot of capital gain on your investment property, and maybe it has outperformed the average market growth, and at that time you have paid down the mortgage quite a bit. If this happens, then you can buy your own 5-bedroom house within 10 kilometers of the Sydney CBD. A property actually helps you build wealth in two ways. One is it gives you capital growth. Two is it forces you to save and pay down the mortgage. So you become richer even though it really is your own savings that you put into the mortgage. By the way, half of your wealth creation comes from time in the market. The other half comes from timing the market and picking the right investments. So you want to start early. Buy a $200,000 house in the middle of nowhere if you have to. It's probably still going to increase your wealth compared to if you do not buy anything and spend the money, because you still have the forced savings component even if your investment property goes down in value, and it probably will not even go down. Just don't sue me if it does go down. You have been warned. Tip number 12 is to spend less. Of course, the less you spend, the more you save, and the bigger the deposit you have. Your home can be bigger if you have more cash to pay for it, right? But honestly, if you are modest with your property purchase price, you do not need that much money to be saved. $100 a week from each of you and your partner can get you a $650,000 home within 5 years. But if you want to save aggressively, of course you can. It doesn't hurt. Check out this movement called the FIRE Movement. FIRE stands for Financial Independence, Retire Early. The goal of this movement is to save aggressively when you are young. Save for the next 10 or 20 years. And by the end of the journey, you will have so much money that you do not really need to work anymore. You invest your savings into the share market or into an investment property, and you get an ongoing passive income every year after you retire at a relatively young age. You do not need to retire to buy a home, and in fact, you cannot retire yet if you want to get a home loan. But you can adopt some of the lifestyle habits from the FIRE movement. On Google, there are a lot of tips to save 30% of your income, 50% of your income, 70% of your income. It's crazy. If you save 70% of your income, you will have a lot of money in no time. You can also Google minimalist lifestyle or financial minimalism. If you follow this kind of lifestyle, you will be able to save 70% of your income after tax and buy your first home very quickly. Tip number 13. Use a different bank account for your savings. If you are trying to buy a property with a low deposit, usually the bank wants at least 5% of the property purchase price to be your own genuine savings. Genuine savings means your own money that you have saved, not from the casino but from your salary, and you need to show that it has been in your account over the last 3 months, and the amount remains roughly the same over the last 3 months. So what this means is that, firstly, you want to keep your savings in one single account. Do not move it around too much, because the bank assessor will have a headache trying to figure out the money trail if you move it around. Even if another bank gives you slightly higher interest rate halfway through your savings journey, maybe just keep it in the same account. Today, interest rates are around 1% anyway. The interest is very small and it's not going to make a whole lot of difference. When you apply for the home loan, you need to give the bank a statement of your savings account for the last 3 months. By having a dedicated savings account and separating it from your salary and living expenses account, you can show your savings history clearly. And also, you do not need to explain your living expenses line by line. Because if you are unlucky, sometimes it's possible for the bank to ask, why you spent $1,000 last week in a fine dining restaurant? It turns out that perhaps you paid the bill for 10 of your friends, so it's not just you, it's 10 people, or 11 including yourself. But your friends reimburse you in cash. You still have the cash with you, and the bank cannot see it in your account, so they assume that you splurge on lobster and caviar. You can of course explain yourself, but why cause unnecessary headache and waste time explaining yourself when you can avoid this problem to begin with by separating your savings and your other stuff? Alright, there you go. 13 tips to maximize your chance of getting your home loan approved and successfully purchasing your first property. If you want to get notified of our videos on home loans, personal loans, and business loans, please do not hesitate to subscribe to our channel. And if you want some help on getting a home loan, we are a legit mortgage broker in Sydney. You can reach out to us at contact@lendingclinic.com.au. Thank you for watching and have a lovely day.